This morning we have a terrific keynote for you. You'll notice a couple magazines on your table there. Obviously, Business Facilities is one of the magazines. The other magazine is FDI. It's owned by the Financial Times, which is, I think, Nikkei now, correct, Courtney? And we do a joint section with the folks from FDI in the fall, and it's put together with each publication, polybagged with them, and it's distributed over 55,000 corporate level executives who are involved in site selection throughout the world. It goes to 5 continents, so it's a kind of a unique partnership we do with FDI, and we're kind of bringing that partnership to life here today by having them come and welcoming Courtney to the panel today. Anyway, so we get this rocking and rolling, we get this started. I want to introduce Jack Rogers. Jack is, as you know, the editor-in-chief of Business Facilities, and he will be the moderator, and he'll introduce the panelists. Thank you.
Thank you, Ted. Good morning. Today, we're going to be talking about what we're calling growth without borders. The subject is foreign direct investment, which is probably one of the hottest issues in economic development today. The competition for foreign direct investment dollars is fierce, both the inbound FDI and also outbound FDI. And we're very fortunate today to have, and I can say this without exaggeration, 2 of the world's leading experts on foreign direct investment. To my right, Peggy Philbin is the Deputy Executive Director and Chief Operating Officer of Select USA, which is a program under the International Trade Administration within the Commerce Department, and it is the first U.S. government-wide initiative to promote and facilitate investment in the United States. And if you're familiar with it, if you've been to the investment summits that they've been hosting in Washington, you probably agree with me that it's one of the best forward-thinking initiatives that the federal government has undertaken in a long time, and it should have started a long time ago. The investment summits have grown exponentially. The 2015 Select USA Summit had more than 70 representatives from more than 70 international markets. It had representation from economic development agencies in all 50 states. The participants got a chance to hear not only from President Obama, who's delivered the keynotes, but 6 cabinet official secretaries. There were 3 governors there, and there were global CEOs of major corporations making presentations. And from what I hear from Peggy, the upcoming summit is going to be the best ever. So Peggy is going to give us an overview of Select USA's activities. We also have with us Courtney Fingar, who is the editor-in-chief of FDI Magazine. Courtney is also the head of content for FDI Magazine's Associated Data Division, FDI Intelligence. And both of these are, without question, the most authoritative and comprehensive source for information about foreign direct investment. Courtney is going to give us a preview of the 2016 Global Trends Report, which has the latest numbers covering markets all over the world. It hasn't been published yet, but it's got some interesting, very interesting trends and a few surprises. So Peggy will go first, then Courtney will give you her presentation, and then we're going to have a discussion up here. I've got a number of questions I want to ask both of them, and we're also going to take questions from the audience. So without further ado, I'd like everybody to welcome Peggy Philbin.
Good morning. First of all, I want to say thank you to Jack and to Ted and Business Facilities. LiveX, I know this is the 12th year. What an achievement. I'm very proud and happy to be here this year. I'm also delighted to be sharing the stage with Courtney. As Jack said, FDI Markets is a huge resource. Probably it is the #1 resource to our program also. It's cutting edge. It has the most effective, reliable data. We use it all the time, so it's a delight to share the stage with both Jack and Courtney. So my goal for the next few minutes is to tell you a little bit about this program. As Jack said, Select USA is a little late in coming. We're an investment promotion agency or program that was only started about 5 years ago. However, as some programs in the government happen to be, we only got a budget 2 years ago in 14. So things started to heat up after 14 when we had some money to do something with. So we've really grown tremendously in the last 2.5 years. And we have a lot to tell you about what's happening now. Prior to us coming into existence in 11, there was no federal level foreign direct investment agency. So the states, you all have been doing tremendous work in this area. You know the value of foreign direct investment as well as exporting. Prior to that, though, there was no federal presence. And so when we came into being, there was really, to be honest, no place to put us. We landed in the Department of Commerce. I'm going to tell you a little bit about that transition and how that has worked. But before I tell you about our history, I thought I'd start with this chart because I feel this is the chart that brings us all together. It's our common background. Because if we're going to sell our location, our state, our sector, we really have to start with selling the United States, right, to foreign investors who come over. And we have so much to tell. The story is fantastic. And one of the challenges when you deal with foreign investors, foreign businesses, is they have a geographic idea of the United States of having 2 or 3 key geographic areas to go to, and then the rest gets a little hazy, right? If you've dealt with this before. So it's very important to start with saying this is what's so valuable about the United States. So let's talk about a couple of the obvious important ones. First of all, it's the world's most attractive consumer market with 320 million people. Diverse market. All over every state is very different. It has a $17 trillion GDP. It has free trade agreements with 20 nations. So when you're talking about a foreign company who wants to come here, and as you know, many of the bigger companies, the sophisticated companies know this, but some of the small, and I know for us, a lot of the businesses are small and medium-sized businesses, don't understand the value and the power of the free trade agreements we have as a platform. And I'm finding, even in our program, more and more companies are coming here to use us as a platform to export. 20%, and I'm only going to do a few statistics because with Courtney on the stage, I'm going to bow to her authority on this. But there's a couple of numbers that are worth mentioning. 20% of all the goods exported from the United States come from foreign-owned companies in the United States. 1/5. So if the businesses come in, 1/5 of their output is going to be exported. Very important to feature to tell the companies coming in. It has, one of the common comments we also hear, which I'm sure you hear also, is the stability of the U.S. Market. You know, the banking system, the legal system, the regulatory system. People expect that if they put their money and their assets in the bank, that's going to be there as time goes on. They understand we're a legal-based system. So while I know, and having talked to many companies, that can be off-putting sometimes, particularly in places where that's not the way business is done, once there's a comfort level, once you can explain, as you know, the value of the legal system that protects their intellectual property their right to exist, their basis. Do you know we have a national treatment in the United States? So foreign companies that come into the United States are treated the same as US-based companies. Those are very powerful arguments to make to foreign businesses. So we're a global leader in research and development. 30% of the world's R&D funding expenditures are in the United States. And just one or two more things I want to mention before we go into Select USA. 15 of the top ranked universities, according to Forbes, are in the United States. And it's amazing, sometimes we've had a couple of clients whose top CEOs want to come, and one of the questions that comes up is, where can my children go to school? So you never know what the leading, that could be the factor that kicks them over the edge. These are the types of things. So this is our common thread that brings the businesses together to the United States. And as I'm sure you also know, it's no longer state against state so much. It's really the United States as a global destination for companies. And then once they're in the United States, there's often the opportunity to expand. So to Select USA, let's see if I know how to do this. Okay. So Select USA, when we were started, one of the fears for the program is, what would the federal program do with the state initiatives that were going on? How could we be value added? And it was a very good question, but there was definitely a tension on how the federal government would fit into this environment and what value add we could bring. So just briefly, some of the services we bring to the table. We provide tailored assistance to investors, and I'm going to talk about all of these in a little bit more, but this is strategic counseling. We give them data. We have a variety of tools. Some of them are public on our website, some of them are not, that we provide. We recently started an investment analysis group in Select USA. It's run by an economist. We are in the process of developing an FDI database. Most of what we have, we are looking for ways to put out publicly on our website so that the states can have easy access to it. We also provide coordinated support to states and localities. So there's a lot of individual work with the states, and somebody asked me last night at the reception, do we work just with the state level EDOs? And that is not the case. We work with many regional, local EDOs. We have no distinction. Sometimes when we are doing like our summit and we have booths, we try to get everybody under the same umbrella, to be honest, for some coherence. But no, we have worked with EDOs at every level in the state. So we have a service called advocacy, and Department of Commerce also has a service called advocacy. And this is when, from a FDI perspective, a company is looking to the United States, but is also looking to another foreign destination. We can develop a case. There's a process, a very intense process that goes into developing all the factors, and we can build this case up to the highest levels in the government to advocate for this company to come to the United States. One of our most recent cases involved a vice president who got involved and worked with the company, and the company did decide to come to the United States. So this is one of the ways the federal government can help. Another way we can help, of course, is with the regulatory landscape. We have a group called the Interagency Investment Working Group. It involves 24 agencies. And when questions come up involving some other agency, we are not experts in EPA or education or energy. So we have contacts at those agencies that we can work with if there's an issue that needs to be resolved or further explained. So it's been very successful. We also do world-class events. I'm going to talk about that in a minute. Jack said explained we're part of the Department of Commerce. We have a Select USA headquarters team in Washington, D.C. We now have 14 people on the ground overseas. We hope next year to double that number. They are extremely effective in promoting our business overseas. most of the people we've hired are investment experts. They have worked for other foreign investment agencies. They've come to work with us. They have really done an amazing job, and we see how much value it is to actually have our own people on the ground. However, in addition to that, we have commercial service officers in more than 70 posts, embassies around the world. This is a factor that the federal government can really weigh heavily on. So when most of the contacts we have for foreign businesses come through the embassies and work with our posts who then reach out to us. We have the expertise in FDI, but the posts are on the ground, and that's where the relationship starts. So playing that out, there's hundreds of commercial service officers around the world. And in the United States, I don't know if some of you worked with our USACs, our U.S. Export Assistance Centers. Well, they are now incorporating investment into their portfolios. There are 100 offices in the United States. Some of them are small, but there's 300 people on the ground in the United States who also we now work with. So we're trying to leverage our position in the Department of Commerce so that we can expand a lot more quickly than when I started, which was only about a year and a half ago. There were 10 people in Select USA. So leveraging is a key factor for us. And we're not 10 people anymore either, so that's a good thing. And I already mentioned the Interagency Investment Working Group. So this has been extremely valuable. We actually had a case in an investor in Louisiana who was having a problem with the energy department getting a permit, and it was really more of a technical problem, not a substantive problem, that we were able to clarify and clear up for them within a day, and the project went forward. So some of the things we do, I've already mentioned. We do research and strategic counseling. We work with EDOs. We work with companies. One of our effective abilities is to sit down with a foreign company, and you know this too. Sometimes if the federal government, I'm not saying this is always the way, but sometimes if the federal government is involved with the initial negotiations, a foreign investor might feel a little more comfortable. Doesn't mean we're better or more knowledgeable. It's just that, oh, okay, if the federal government's here, then this must be for real. So it has helped the conversation on a number of times open up the doors for moving a deal along. Connections, though, I would say that our sense is one of the most powerful tools we bring to the table are the events we have. Sitting where we do with the overseas presence, the domestic presence in the United States, and our own people here in Washington and in our 14 locations, we have had a dramatic effect on bringing both states and investors to the table. So I'll talk about the summit in a minute, but one of the common ways we do this is we have road shows, and I don't know if anyone has been on a road show here. We advertise all our road shows on our website, so they're open to any EDO that wants to come. Last year we did, I believe, 14 road shows. One of them in Brazil, I went on the Brazil one, and we had, in the space of a week, going to 3 cities, 500 people come to the different cities and meet with, I think we had 8 states with us. We had about 15 service providers. We do roundtables, similar to what we're doing at this conference. We do matchmaking at all our road shows, and they become highly effective in terms of bringing people on the ground to the market. A version of that is what we call single location promotions or customized roadshows. So there are states who have asked us to develop a customized roadshow for them. They want to go to a particular market. They don't want to go with a big group. They want us to really set this up beforehand, make sure they know who they're going to meet while they're on the ground. So we have done that. All our services, with the exception of the customized roadshow, are for free. We do not charge for our services. We also honor everything as business confidential. So there's a great opportunity for states here. On a customized roadshow, there is a fee it's a much more intense involvement of the post. On the other roadshows, it's just cost recovery. We just charge you for whatever the fee is for going there. So these have been highly, highly effective. So I just went through most of these. And so let me end with the summit. We've had the third summit is coming up in June 19th, 20th, and 21st. The first summit had 1,300 people, a mix about a half and half of foreign companies and EDOs and service providers. Last year's summit had 2,600 people. We had 54 ambassadors, U.S. ambassadors, come to the summit last year. They all led delegations. Some of them led delegations of 80 companies, 90 companies. There's a little competition going on right now with the ambassadors to have the biggest delegation to come to this year's summit. We'll see how that goes. But it was a very, very exciting event. The president came, as Jack said, the president has already announced he will be there this year. He's been at all the summits. I think it's been a tremendous honor and value to us that the program has gotten that type of notice and support from the government as a new program. It's really launched us in a way that nothing else could. We had 6 cabinet secretaries last year. I don't think they allow 6 cabinet secretaries to go to the State of the Union, right? But they were all at the Select USA Summit. So it's a really fantastic opportunity. And the other thing that happens at the summit, we take it very seriously what the topics are that we discuss. This year it's called the Innovation Advantage, and we have crowdfunding discussions, disruptive technology, advanced manufacturing. But we have some really top-notch people. We've had the CEO of Google, we've had BMW, Embraer. I mean, many, many top-level people speak. And one of the roles we feel we can bring to the table is sort of bring a thought leadership on FDI. Here you've got people who this is their life's blood. This is what their business does. And they are willing to come and talk about what it's like to come to the United States and why it's so important. So it's really set the stage to make this a premier event, and I'm more than happy to answer questions later if people are interested in more specifics. But this year we expect about the same number as last year, and I think it's an excellent opportunity. In 3 quarters last year after the summit, we had $5.5 billion of deals. I think it involved 21 states, and I'm forgetting my third statistic. That's why Courtney's the expert in the statistics. But a lot happens at the summit. You know, you've got 2.5 days of intense matchmaking and opportunities to sit down and talk. And the last point I want to make is that at the summit, last year we started a training program called the Academy, and we're going to repeat that this year. And the training academy happens at Sunday before the summit. We had 400 people come last year. It's really an excellent, it's give and take, it's much more interactive. And it's an opportunity for, if you have clients, if you yourself want to come, and you know, it's more on the, I don't want to say the basic level, but it's more open to answer questions and try to figure out where are the challenges. The main 2 days are very much a presentation format. The Academy's a lot more interactive. And this year we asked for ideas from the community, and we got 70 proposals. So the ones we've picked for the Academy all sound terrific, and they came from EDOs and other service providers like yourself. So we anticipate a great event. Anyway, again, I'm delighted to be here. We admire all the work you do on behalf of the United States, and thank you again.
Thank you, Peggy. And now Courtney will make her presentation.
Can I get a little bit of help changing over?
Yes.
I'm scared if I touch something, it will explode. While we get the slides changed over, I'll just say, first of all, good morning, everyone. It's really nice to see all of you. It's even nicer to flee the British weather to come to Fort Lauderdale at this time of year. I'm really delighted to be participating. As Jack mentioned, we've launched a partnership with Business Facilities magazine over the past year and this is another step as part of that. We think it makes a lot of sense for us. Business Facilities has the real ground level information about the U.S. market and about corporate site selection here, while we see ourselves as the macro people with our international coverage, real eagle-eye view of the market. I think that this is an excellent format for an event to have the matchmaking and the one-on-one, so congratulations for what looks to be another successful year of this event. As Peggy mentioned, Select USA is a client of ours on the data side, so we working a lot, and I know quite well the commercial officers in the U.S. Embassy in London. We partner a lot together, so it's good to meet another Select USA person. Just by way of a little bit more introduction, following on from what Jack told you, FDI magazine is a specialist publication from the Financial Times Group in London. We have a data division, as he also said, FDI Intelligence. FDI Intelligence includes two core databases. One is FDI Markets. This is a live subscription database that's tracking foreign direct investment, only greenfield investment. So that's an important thing to say. All of the data that I'll show you excludes mergers and acquisitions and other types of investments that are not greenfield. We also track interstate investments, so we will track projects originating in one U.S. state into another. It's the only country that we do that for. We track investments for all sectors, all types of business activities, from R&D to manufacturing and everything in between, and for every country, city, and state in the world. Now, you probably notice there's always, I think, a little bit of a surprise and maybe disappointment when people think they're getting a fancy British editor from the Financial Times and my twang comes out. So I have to go ahead and out myself that although I've lived and worked in the UK for 15 years, I've been in the FDI job for 11. I'm actually from Birmingham, Alabama, and so I'm not even a very secret, raging Alabama football fan, despite my sophisticated-looking graphs. So, What we have to present to you are our findings. Most of this comes from our database, FDI Markets. So I'll give you a little bit of the global picture. We'll talk about some of the key trends that we've identified and some of the growing sectors, and then I'll delve a little bit more closely into performance in North American states. So what's the investment landscape look like globally? Well, it's a little bit of a rocky landscape. We track things by number of projects, so just sheer number of projects. We count new investments and also major expansions of existing investments. So we track by project, by number of jobs created by the projects, and capital investment in the projects. So again, I apologize for throwing graphs at you this early in the morning, but that's what I'm here for. The red bar is the number of projects. The blue is the jobs, and the green is the CapEx. Now, this shows from a time period of 2003 up until the end of last year. No other significance for starting with 2003, except that's when our database was invented. But it gives you a nice, I think, stretch of time to see. Now, what you can see is that, there's been a little bit of a rocky path. It was reaching up, hitting a peak in 2008, global financial crisis. It's been kind of up and down ever since then. But the one interesting thing to be aware of with greenfield investment is, although you can see a little bit of up and down on these charts, greenfield investment is a lot less volatile than M&A investment. So when you're looking at what we call headline FDI figures, so that would include all capital inflows, you tend to see charts that look like a mountain peak. Greenfield is a little bit more volatile, and that's because investors are taking a long-term view, and these aren't erratic decisions that you can reverse overnight or cancel very easily. So if you look at 2015, so coming up to most current, our data is live, so we do have an early read on 2016, but we like to take the 2015 figures, condense all of them, and then publish our findings in April when we can really get a sense for all the projects that we would have tracked the previous year. 2015 wasn't bad. Slight dip in number of projects. There was a 7% decline in number of projects globally, but a 9% increase in CapEx, so balancing out fairly well. Jack mentioned our report. I'm giving you a little bit of a preview here. This report will go live on our website on Wednesday. You can feel free to download it. It is free. If any of you have a particular interest in it and you want to give me your business card, I'll be happy to email it to you and share that with you. So for this, we take a look at the data as of the year end 2015. We crunch all the numbers and do a sort of year in review to see what it can tell us about the FDI market the previous year. So here's what we found. Just an infographic to give you the big headline findings. Top source country of projects, so we're looking at where money's coming from as well as where it's going. The US, top source country for FDI projects globally, by FDI CapEx, also by FDI projects. Top sector, natural resources. Probably not a surprise when you're talking about CapEx, just because these tend to be big, high dollar projects when they happen. Interesting one, if you look down at the bottom, India. Now, for the last few years, it's been a two-horse race between the US and China vying for supremacy. Last year, the US remained the top destination country by projects, but China was the largest country by CapEx. So while US and China were busy duking it out, a third horse has come racing around the bend without really much notice and is now number one position. So India surpassed China last year. I'm going to talk a little bit more about that in a moment. India surpassed China, is now the world leader for attracting capital investment. So I think in terms of competition that the US should be concerned with in terms of destination for FDI, India is the one to watch. When it comes to sectors, I mentioned that natural resources is still the biggest sector, but that's just because they tend to be very capital intensive projects. But renewable energy, which had been one of the hotter sectors and then declined a bit last year, is now back on the rise. You can see it's now, if you look on the right to my pie chart there, it's now number 3 for market share. This is for global CapEx on greenfield projects. And you can see my other graph where it's risen. That's between 2014 and 2015, in case you can't read underneath the bottom, the last line there. So you can see it's come up based on actual CapEx, but also market share. And it's the wind and solar that's driving a lot of this expansion. I mean, there are various other hot areas in renewable energy, but that's where we're seeing the biggest increases. Destinations, so where this investment is going, tends to be still developed countries. We have the US, followed by Germany and the UK as the top 3 destination countries for renewable energy investment. But we're seeing some big investments in some emerging markets. India, Myanmar, South Africa, Panama, and Pakistan were some hot markets for this last year. So I mentioned to you about India, and we really see this as the big FDI story of the past year, India passing China. So if you have a look at my line graph there, you can see that China has had capital investment decreases while India has had an increase, so the lines have met, and in fact, India passed it a little bit. India now has also ranked number 1 in terms of market share for capital investment. There are a few things going on here and driving this. As you'll be aware, there's been a slowing economy in China while growth in India is racing ahead and is quite rampant growth right now. So there's if you were to take their economic growth, the graph's looking very similar to that as well. Costs are rising in China. So the country is in that transition period. It's no longer necessarily a cheap place to manufacture. A lot of those manufacturing projects have gone elsewhere, especially in Southeast Asia. Vietnam has really benefited from the rising costs in China. And actually, so has Mexico. We did a study earlier this year. And Mexico seems to, in fact, be the biggest beneficiary in the world for rising costs in China because of the cost competitiveness. The gap has really closed. So that's really driving a slight decrease in China. It obviously remains a Goliath for FDI and economically, but others are catching up and in a position to even pass it. Meanwhile, in India, as I said, they're having really rapid economic growth. The new government in India, led by Modi, has been well received across the board by businessmen. Still some problems already. You get those frustrations that promised reforms aren't happening fast enough, might not happen at all. But there is a sense that there's a pro-business leader in charge. He was among the most successful Indian governors ever in his state, Gujarat, in terms of attracting FDI. So there's a feeling someone that gets FDI is in charge. Just to give you a sense of what's going on in some of the other regions, I apologize, it's a bit of a crowded is a bit of a crowded slide, and I'll just give you the headlines again. Any of this, I'm happy to share my presentation. All of these charts are included in the FDI reported as well, which I'll be more than happy to pass on to you. Europe, as a region, we saw a decline. That's if you include Western Europe and what we would call emerging Europe. It's been on the decline for the past few years. Europe's been a bit of a laggard on global FDI growth. But if you strip away and look only at emerging Europe, that was one of the few regions last year where we saw an increase in projects, CapEx, and jobs created. The UK is the real leader there, but huge question marks now. As you might know, the UK will face an extremely important critical vote on June 23rd about whether to leave the EU. We're doing a lot of studies, and I'm on a speaking circuit right now analyzing what it would mean for FDI in the UK, and in general, it wouldn't necessarily mean a whole lot very good in the short term. So I feel the UK is gambling a little bit with its premier destination status for inward investment. Really have to see what happens there. Latin America and the Caribbean is the worst performing region. According to our figures, we saw declines in that region of double digits for projects and CapEx. A lot of this is Brazil dragging it down. There was a slight decrease in Mexico as well, only 4% though, but Brazil, which was the big star only a few years ago, suffering a whole wide range of problems from political crises, economic problems. They've got a lot going on there, and this is dragging down the investment flows in that region. Middle East and Africa we put together as one region, but if you separate them, essentially the Middle East overall has seen a decline, but that's compensated by the fact that there's been a 6% increase in Africa. Huge interest in Africa at the moment for some of the fast developing countries there. A lot of economic growth being seen across the continent. Investors are really starting to pay attention. Egypt is an interesting one because it's a little contrary to what you might expect. Egypt's seen huge turbulence over the past few years, and geopolitics is still a very difficult business environment, a lot of corruption issues, but because of the huge population and therefore the huge consumer base, companies are still quite bullish on Egypt. Now, we come a little closer to home. North America as a region saw an increase last year. Capital investment was up 10%, so this is very good in this kind of market. Projects declined by 6%, so that balances out a little bit. In terms of the performers, you can see here we're ranking the states by project numbers, which is the table, and the pie chart is by capital investment. So a few interesting trends. California is still, when it comes to project numbers, the leader, but look at that 17% decline. Other states are just becoming a lot more competitive. In the new economy, tech clusters are popping up everywhere. There's no longer this idea that you have to be in California. You can't run proper projects in the high-tech sectors anywhere else. So other states are really capturing a piece of that. Also declines in Massachusetts for similar reasons. Companies are finding that they can find just as good opportunities in other less cost-effective states and with a little bit easier business environments and lower taxes. So as a result, California's losing market share. Now, a few winners here, if you see, and again, I'm a little biased, but if you look at small states like Alabama and Louisiana, I mean, they're now in the top 10 for capital investment. And if you think of this per capita, Alabama, a state of only 5 million people, but getting 4% of the CapEx coming into the U.S., I mean, this is a pretty good achievement. I don't like the fact that we've tied with Tennessee. Fortunately, that rarely happens in the football, but we're duking it out there, and Louisiana as well. So I think that just shows that you don't actually have to be a big state with a vast market in order to compete strongly for FDI. Just to take a look, not just over last year, but if we take a broader time frame about inward investment into the U.S. to give you a sense of what's going on. Very interesting thing about the U.S., which is contrary to almost every other market in the world, is that after the financial crisis actually saw an increase in investment. It's a little bit ironic because a lot of the problems, the real estate crash and the financial crisis originated here, but what we saw is that after the financial crisis and companies became more risk averse, they sought investments in perceived safe havens. So we saw increases in places like the US and Canada and the UK because these were perceived to be a bit more solid. Again, other countries would argue that the U.S. wasn't necessarily a safe haven at that time because the economy was in turmoil. But it just goes to show that developed countries still have an advantage, because in developing countries, even though companies will race in there chasing big opportunity, they are scared off of those markets a lot faster than they get spooked by developed country markets because of that long track record of delivery. So you're having a pretty good a run in terms of FDI, so Peggy will be glad to know. These numbers are looking pretty solid. Slight decrease last year in project numbers, but this is compensated for by an uptick in capital investment. The U.S. is still the #1 country in the world by number of projects, even though India has surpassed it by sheer capex. And when we look at where money is coming from that's investing in the U.S., a lot of focus these days is on China, and I'll come to that in a moment. Now, China, last year in our report, we reported that China had become the #1 investor in the U.S. by capital investment in greenfield projects, so that was a quite significant development. But if you look at strictly the number of projects, it's Europe that is still the area delivering the projects. Of course, that's because the Chinese invest in projects, they tend to go in big, so that's why you get the bigger volume of investment coming out of China. Europe also tends to invest in sectors like software and IT and others where you might have smaller projects, but a large number of them. So our friends in the UK are still the biggest contributor to investment projects in the US. Makes a lot of sense for a wide number of reasons, followed by Germany. Other countries are in there, such as France and Europe, and Japan, of course, contributing 15%. Been a lot of interest in recent years in capturing investment from China. But we've seen increases not only in China, but in emerging markets in general, which have become a more and more important source of outbound FDI. And of course, this is something we've been tracking really actively through our data. I write a weekly column in the Financial Times for their emerging markets section, so I'm nerding it up all the time now about emerging market investors and how they're behaving and what they're doing. So this is one of my charts that we did with one of my recent stories, looking at where emerging market investors like to invest, and it's here. So you can see that the U.S. Is the top-ranked country by capex and by project numbers for companies that are headquartered in emerging market locations. The UK is #2, and again, I've kind of been doing the circuit arguing to the UK that they are potentially jeopardizing this, because most of the big companies from emerging markets, when you ask them, do they prefer the UK in the EU, they say unequivocally, yes, they do. So China, of course, is the big daddy when it comes to outbound investment from emerging markets, but we're seeing a little bit of a slowdown here. And this points to the need for not just focusing only on China and trying to engage Chinese companies, but there's a need to, of course, keep sources of FDI diversified, pay a bit of attention to other emerging market countries which can be sources of investment. So project numbers last year from Chinese companies increased, so this is encouraging. But if you look at my green line there at the top, there was a faster fall in capex, so this suggests a little bit of it is a shift in sectors, so looking at these smaller projects and the type of sectors where you tend to have small headcount projects, but they're having more of those, that's a positive development. But of course, you still want, your ideal mix is to have a lot of projects and a steady level of capex, so we just see that shifting a little bit. Now, what we don't know is what will happen. You know, Chinese economy, of course, is slowing. On the one hand, this can mean a slowing market at home, all the more reason to expand abroad. The Chinese government still remains committed as a policy to encouraging outbound investment and for Chinese companies to go global. So there isn't really a lot of reason to expect any kind of a crash in Chinese outbound investment. So we'll keep watching that one though. So looking ahead. Now, making predictions is a little bit of a fool's game, but we still have to do that because everyone wants to know. Well, it's all well and good to talk about what happened last year. What do we think is going to happen in the future? So we run some numbers, and every year we publish an official forecast, and what we're expecting for this year is a 5% decline in FDI, and that seems pretty realistic to me. We don't expect any big crash again because greenfield investment rarely ever actually crashes. It might decline a lot, but there's not a lot of reason with a lot of things going on in the world to expect a huge increase either. So we're expecting a very small decline. But beyond that, we're optimistic that it might continue its steady recovery, continue on the path that we've been seeing after the financial crisis, and in the next 3 to 4 years, we would be expecting something around 3 to 5% growth every year. So this is a little bit modest, kind of sensible recovery. And that's all for me. I'm very happy to take, of course, any questions that Jack or anyone else has. You can feel free to drop me a line, contact me at any time if you want any more information on anything that I've presented. Thank you.
I want to thank both Peggy and Courtney for two excellent and highly informative presentations. Do want to open it up to questions, and we'll take questions from the audience. But I just wanted to start out by asking you, Courtney, the past couple of years, China, which is sitting on huge cash reserves, some estimates are as much as $3 trillion. They've come under a lot of pressure to increase their investment in the United States. We all know that there's a lot of controversy over how they support their exports through, if we're going to be honest about it, currency manipulation. You've heard a lot about that in the presidential campaign. So I think it was last year when President of China visited the United States, they boldly said that they were going to invest about $1 trillion in the United States. But based on the trends that you presented today, and of course the difficulties, and I know it's hard to believe that 6.5% growth is considered a difficult situation. Here we would applaud that, but in China, it's actually 7% growth is actually the red line because of the size of the population. The red line for them, where if they feel that if they don't sustain that, it could actually lead to unrest and disintegration of the system. So my question is, do you think they're going to be able to deliver on that promise, or should we expect quite a bit less than what was advertised?
Well, I think a trillion is potentially a bit optimistic and ambitious, so I don't know that it'd hit that level. But again, it's still, regardless of the difficulties at home, there's still a lot to be gained for China to pursue outbound investment. I mean, it's kind of part of their overall foreign policy now. So as I mentioned, I think the Chinese companies are still being encouraged and supported to expand overseas. And the Chinese government, they still have a lot of money to deal with, and they do use big investments in infrastructure and big strategic investments as actually the sharp end of their diplomacy and foreign policy. So I'd anticipate there's still a lot of hope to be getting huge investments from China. It may or may not reach that magic figure.
Now, this is a related question. The conventional wisdom, at least for the last couple of years, has been that outsourcing of U.S. jobs, particularly manufacturing jobs, is starting a downward trend, and we're actually seeing jobs return to the United States. But looking at the figures and the outflow from the United States, which is still pretty robust, particularly into China, would you say that the overall outlook in FDI tends to contradict the hope that outsourcing is declining?
I think the most realistic hope is not that outsourcing would stop or that U.S. companies would have as their primary focus manufacturing in the U.S. The most realistic hope is that both things happen, that it doesn't have to be one or the other. When we looked at the numbers in tracking U.S. outbound investment in strictly manufacturing projects, in the last year or two we have seen a small decline. So this suggests one of two things. One is that U.S. companies are perhaps siting some of those production facilities in the U.S. instead of abroad, or just that they're in not as much expansion mode, and maybe they just didn't cite as many manufacturing projects anywhere. I'm not really sure which it is. But I think any U.S. company, their own sensible approach would have to be anyway, both looking at manufacturing opportunities in the U.S., because it's still a highly attractive country for manufacturing, but we can't really rule out that it might make sense in a lot of cases to outsource, particularly if you're going to serve Asia. Again, you might as well putting a factory in somewhere like Vietnam is still going to be advantageous. So I don't think it has to be one or the other, though.
Peggy, last year, and actually through the first half of this year, there was a huge fight in Congress over reauthorizing the Export-Import Bank of the United States, something that had served us very well for more than 50 years. On the export side, some of our largest manufacturers said that if the authorization did not continue, we could see companies like Boeing moving their manufacturing overseas, because the support from the Ex-Im Bank is needed to seal the deal with a number of overseas countries representing those industries. Does the Ex-Im Bank, is the Ex-Im Bank also critical to support FDI and imports?
I think, well, first of all, the Ex-Im Bank is very important, and I think some of its reauthorization issues arise because of the lack of understanding of what role it plays. You know, it gets a lot of publicity over its support of a few big companies, but its vast majority of support is for small and medium-sized companies, and it makes money every year. It brings in more than it lends out. So it has a strong history, but it also has a history now over the last number of years of being in this whirlwind of having its authorization pulled back and forth. So it's difficult, and it's very difficult, I mean, not only for Ex-Im, who had to sort of shut down operations for months. They have enough ongoing cases that they can keep going, but it's a problem. I think the short answer is any type of these funding outlets are very important for both exporting and importing. And I think that while it's been focused more on the export and import, foreign direct investment has not been its focus in the past. We are really looking, I know Fred Hochberg, the head of Ex-Im, and we're talking more about different roles that we can play together.
Do we have any questions from the audience?
Juan Gallardo, I'm with Hickey & Associates. We're a global site selection firm. I run our Latin American corporation, and I was born in Mexico, and I'm interested both in inbound, outbound, particularly right now with the presidential campaign, from an outsider perspective. It's interesting to watch both Bernie Sanders and Donald Trump talking about building a wall, ending all free trade agreements. I don't know, I'd be interested in hearing from Bernie if you have begun to see any impact at all, both on inbound and outbound, and from Peggy, if there's anything you can do as Select USA to counter that narrative, because as a foreigner, you see that at least 40%, both on the Republican and on the Democrats, are basically against all these needs.
You mean inbound, outbound with the U.S.?
Yeah, well, investment to Mexico,
Okay.
for example. I don't think Donald would be very happy about it, or Bernie for that matter. And inbound, actually, we have companies from Italy and Spain that looking at all these mess are delaying their projects coming to the U.S. They're saying, nah, let's hold.
Yeah, I think there's a lot of damaging talk on the campaign trail. It's not really making Peggy's job necessarily any easier. And I think, especially with regards to Mexico, I mean, first of all, as I said, Mexico has become even more popular for U.S. companies as a place for investment as costs have been on the rise in China. So Mexico's really been making hay with that, especially in the automotive and components and also electronics sector. Just looking at my graph now, I mean, Mexico got by far the biggest market share of capital investment into Latin America, got 35% of investment into Latin America and the Caribbean last year, despite a small decrease in projects. It's one of the best performing markets in the region. And I think that its attractiveness to U.S. companies is going to outlast any jingoistic and damaging xenophobic talk that might be said on the campaign trail. I think the relationship in terms of business and economics is sturdier than that, but it doesn't really help. In terms of U.S. inbound investment, Peggy will, I'm sure, have a view on this, but I think sometimes talk is just talk, and again, companies will still invest where it serves their interest and where they can get the returns. But talk also sometimes is not always cheap. It does have a price. So I think, a Trump presidency, what this would mean for inward investment, again, inbound and outbound, because of this very protectionist, borderline xenophobic view that won't really do any favors to the U.S. as an investment destination or as a driver of global investment. And again, on the other side, a Bernie Sanders presidency wouldn't be a whole lot more reassuring. I mean, not really so much offensive talk, but we're talking about a real isolationist, protectionist stance that the U.S. is potentially taking, which has big implications. So,
well, I'd just like to point out, I had the opportunity a few months ago to interview the governor of New Mexico, Susana Martinez, and the disconnect between the kind of rhetoric you're hearing on the national level and what the states on the border are doing to promote trade. New Mexico has had one of the most successful programs. They've doubled their exports. They've created special zones to permit trucks to come in without going through a clearance, so you can increase the traffic. They've done an excellent job of attracting FDI, and the memorable quote from Governor Martinez was that she'd like to erase the border. She's not talking about building walls. She's saying that it's just as you have regional cooperation in the states, and you're finding that as a better way to promote your locations by cooperating and maximizing your resources, the same thing is going on down on the border between New Mexico and Mexico. And as Courtney said, I think the reality on the ground is going to outlast the sort of the passions of the rhetoric. I'm getting the signal from Ted here. I think we've got time for one more question. One more question.
Hi, I'm Sai Finkelstein. I'm with LK2 for Fortune 500. We're investing all over the place. We're in Mexico, also manufacturing. I'm trying to understand, this trend that you're talking about between India and China. I'm assuming when you talk about CapEx, the predominant CapEx is going to be in manufacturing, because where we're trying to save money and dollars and labor. So the next thing that comes to mind is quality control. And of course, China has let us down a few times with respect to the flooring,
Pharmaceuticals.
I'm assuming that's part of the sale towards India, and I'm wondering what the quality in India is going to be like in case we decide to make a shift.
Thank you. Part of what's driving the big CapEx figures is not just manufacturing, but big investments in the energy sector in India. So again, these are really capital-intensive projects. But we have seen an increase in production facilities in India, again, where it's no longer assumed that you should just put a factory in China, that it can't go elsewhere in Asia. India is benefiting from that. There have been issues in India as well with quality. Again, there have been big legal disputes in the pharmaceutical sector. There are also challenges there in intellectual property. Some of the same problems that you see in China exist also in India. So I think some of the challenges that were faced by companies manufacturing in China, they might come into some similar hurdles in India. In some ways, India is a little bit more difficult being a democracy. It's actually, red tape is bigger in India even than China. So I think it's not necessarily an easier place to manufacture than China.
Okay, well, I want to once again thank Peggy and Courtney for two very thought-provoking presentations. I'm sure we all still have a lot of questions and subjects we'd like to talk to them about. You'll have that opportunity during the day, but I know we have to start the show now and go to our meeting. So enjoy LiveX, and hope it's a success for everybody.
That was a terrific keynote. Thank you very much for coming and giving some terrific facts.